back to the Money Show. This week we've got a special guest, flew all the way from Puerto Rico, one of my favorite places because of all the tax benefits that are there. I want him to explain to you what's going on in the market today, and I wanted to bring somebody that can also talk to us about inflation and what's going on in inflation. Jack Krupey has a dual MBA from Kellogg, as well as has 20 years of real estate experience. He joined in the New York Stock Exchange, Wall Street, where he became a partner of a $3 billion fund, which he has extensive knowledge inside the market analysis, going through the ups and downs of those crashes that exist. If you're like me, you've been through some of those crashes and they absolutely suck, unless you can see when it's coming and make all the moves ahead of time to make sure that you can actually capitalize on those crashes versus being the victim of those crashes. On that note, I want you guys to introduce you to Jack Krupey from Puerto Rico. Jack, how's it going?
Great. Thanks for having me.
Love having you on the show, man. Love spending some time with you, talking about investing, market analysis, inflation, all crazy freaking markets, especially where we're at right now with our economy and world. And you hear these stats of 40% of all of our money has been printed in the last freaking like 12 months and stuff. Before I get into a little bit of the market and analysis of what's going on, I want to take a step back just for a second. What drove you to get inside of entrepreneurship, open your fund? You have a fund now that you manage. After the Wall Street, you kind of sold off from there and went to the fund. What made you get into the entrepreneur side?
So, I always had an entrepreneurial streak from when I was a kid. I sold Cutco knives in high school.
Dude, I sold Cutco, bro. I'm a Cutco guy, that's man.
Great. Yeah, and if I go back even further, I think I watched my parents, who had more of 9-to-5 type jobs. I watched them struggle, and I watched, and a lot of just my friends of that generation, I watched a lot of people struggle to really get to the next level. So I think from the start, I always had that ambition to do something, and it's been a 20-year plus journey, and.
Now, do you have kids?
No kids.
No kids.
I have a wife.
So I'm going to ask you a question, although maybe me and you are not qualified to answer this question, but we're going to give our opinion on it. So I hear this all the time, right? I was in the same boat you were in, right? My parents were school teachers, and I saw them work and struggle, and then it's like, okay, me and you, we're like, okay, we're going to go do something different. Okay, so we go on this entrepreneur. We have found this financial success from it, and what drove us was growing up a certain way and seeing our family and struggle and so forth, right? So I cannot tell you how many people on the show come on and say that thing right there, right? Same type of thing. Like, I struggled, my family did, and I wanted something different. But it always makes you think, well, what about your kids now? Because what drove me to success, you to success, these people to other people to success, is they saw their family, mom and dad, struggle. But my kids won't see me, Lord willing, financially struggle like we saw our parents. What do you think is going to happen with that generation?
Yeah, it's tough, and it's certainly going to go both ways. But I do have two of my best friends. This is a common discussion as their kids are getting to the age of even learning a bit about investing. I think you could always force a little bit of artificial struggle.
True.
It's certainly not going without food, which I certainly didn't do either. Just force them to learn, force them to take the hard road. Just make them work. For whatever it is, and then open up the doors in the extra education that maybe you and I didn't have, and we're probably close to the same age even before the internet, where there wasn't even the same level of knowledge or access to real estate and a lot of these alternative investment opportunities as there might have been in the 80s.
Yeah, I heard this great phrase from somebody. I can't remember who it was. I think it was Bruce Lee, but don't quote me on that. But I think it was Bruce Lee. If it wasn't Bruce Lee, then it was me. Okay, but they said in this quote, he said, don't give your children what you didn't have. Teach them what you didn't know. I thought, dude, that is freaking,
that's a great quote.
That is brilliant. Because I don't have kids right now, but I have a little nephew that's 3 years old that I freaking love. And I find myself, even as an uncle, and it is a little bit different as an uncle, but just buying him every freaking toy that's out there, because, and part of it is, I didn't have all those toys, I didn't have all that stuff. He was a lot different, right? And I'm over here buying him $300 playgrounds for no reason. He's gonna use it twice and not, use it again. And I thought, dude, that is dead on. It's like, okay, I can give him what I, didn't have, but you have to teach them what you didn't know. And there's a, because you see it, right? Like you talk about your friends where the next generation can't pick it up, can't keep growing it. It's like they don't see it, they never struggle through it, and so they don't have that drive that you have right now.
Yeah, and they still don't teach it in schools. They didn't teach it when we were in school, and they
don't teach it now. Yeah, it's very unique, man, to see that of how many people say the answer. So you got into entrepreneurship, and that's what drove you inside of it. How did you end up on Wall Street, though?
Yeah, so it was kind of a crazy story. I'd gotten into real estate after the 2001 crash. Thought I was actually going to go more into the technical route, more computers engineering, et cetera. And after the dot-com crash, started making more money in real estate than I was in anything technology.
So 01, you went into real estate.
Yeah, I graduated in 01, and within a year, I'd quit the IT job I had a couple houses, no money down, kind of lived the Robert Allen type dream. And
did you talk to him at the last event?
I did. He was sitting right behind me.
That's right. He was right over there, man.
Nice, probably 20-minute discussion. And, it was,
that's great, dude.
Yeah, it was great. So after that, I mean, kind of just went on this rise until 2007 when everything started freezing up. And it was actually an ad on Craigslist, believe it or not, for looking for asset managers. There was a private equity hedge fund in New York that needed people that had real estate experience because they were buying portfolios of non-performing loans, and they needed, you couldn't just take a random Wall Street analyst and put him in that role. You needed somebody who'd been negotiating short sales from the investor perspective and buying foreclosures and flipping houses to really understand it. So that was sort of my backing into Wall Street, and it turned into an incredible ride over the next 14 years.
Yeah, so you ended up spending 14 years inside of at Wall Street,
12,
basically.
Yeah, basically. Well, what's 12 years?
12 years at Wall Street. I'm assuming at the time you lived in New York City or that area.
Yeah, actually, I used to live on Wall Street and work on Wall Street, and my commute was further vertically.
Vertically than horizontally to get there. Wow, dude. Yeah, I love when I go down. Anytime I go to New York City, which is obviously a crazy cool city, I always go down to the just because of you think about what it represents and what it does for our economy, good, bad, and different. It really is a massive machine that helps run and produce, lubricate, if you will, the wheels of our world economy.
Absolutely, and it's a great place to go to try to make it.
Yeah,
I'm a kid from the suburbs, and to get a couple of years of fund experience, and then went on my own and started building it from the grassroots, and met a family office that put up a couple $1 million, and that turned into 10, that turned into 100, that turned into $3 billion over the course of many years. So it was really a pretty crazy ride for a kid from the suburbs of New Jersey.
I know you have that experience in the market, and then of course you with the $3 billion of fund and all that stuff, and then you also have a kind of a dual MBA from Kellogg. Did you get the MBA right after college? It sounded like you went into real estate first and MBA later.
Yeah, so I actually got the MBA when I left full time at the fund.
Okay.
I still owned a piece of it, and actually went and got the MBA. Took a year and a half off, and actually did the global program through Kellogg. So I was actually back and forth to Hong Kong quite a bit in 2019 during the protests, and when you're a little worried about inflation, and you listen to a little bit of Peter Schiff from time to time, and the printing of money. It was an interesting place to take macroeconomics. I was actually a Columbia professor that moved over to Hong Kong and taught the class there.
Yeah.
So.
Why go get the master's? I mean, or the MBA? Like, what drove you to it?
Yeah, it was, I'd always, being mostly an entrepreneur, kind of backed into Wall Street and private equity. There's a little bit I wanted to round myself out on, just because I was very heads down in real estate for so long that I just wanted to kind of get a little bit of a broader perspective and see the world a bit as well. Especially from the outside of U.S. perspective, when you're taking classes with international students, and you're
deep diving in the culture and the way of life.
Absolutely.
Versus vacation, if you will.
Exactly. And being in the global program too is you fly in somewhere and you're with the whole class for a week and a half at a time too. So the relationships I've built, I still have friends and potential business partners in Singapore, Hong Kong, Israel, Europe.
I've traveled all over. Where's your favorite place though?
Hong Kong's pretty up there. And,
really? I was not a fan, bro. I'm gonna be honest with you. I was a fan of one that you mentioned though. Like my second favorite all-time country. You mentioned it a while ago. Which one it is?
Which one?
On the list you just named? Singapore.
Singapore is great as well.
Freaking love Singapore, dude. It is. Everything about it is like, it's just my kind of cup of tea, if you will. And it's so freaking clean. And it's very new, of course. The road systems, the activities, I love everything about
Singapore is amazing as well. I have some of my closer friends from the program are also in Singapore. I'm waiting for everything to open back up.
I know it.
So.
Yeah, I used to go like once or twice a year. I was over in Singapore hanging out all the time, and I haven't been since 2019. I think it was the last time I went over there. So you got this MBA, which kind of rounded out the whole educational part of also the street smarts, if you will, of the market and inflation and so forth. So let's talk about that for a second before we go into you opening up your fund that when you got to the MBA. So tell us a little about, we hear all this stuff on news, right? I mean, I follow news, and I don't know if I'm a weird person or not, but I actually will read both sides. It's just I don't want to be fed something maybe. So I will read more of a conservative one, and then I'll read more of a liberal one, and kind of mesh my opinion between the two together, right? But I read all the time, and both sides are kind of talking about it, and inflation and all this money that we're printing. What do you see from inflation and or market that's driving it, whichever you want to start with, either market or inflation? But tell us about what you see right now.
I definitely see asset inflation.
Inflation, okay.
Yeah, so I mean, there's what is a gallon of milk going to cost in a few years that really hurts the kind of working class, and then there's what is the cap rate going to be on an asset? Where is all the Wall Street money flowing into because interest rates are at zero? So I look at both of them independently right now, and I have a really, really strong opinion on the asset inflation side of things, and I think we've been seeing that for the last few years.
It's just going up, market. Right? Yeah. Can of beans is going up, milk's going up. I was at a show recently, and I ate at a mall food court, like it was a Philly cheesesteak, like not a nice one, at a mall food court, and it was $22 for my meal, and it was the first time when I sat back down at the table, I was like, wait, $22? Like, I didn't think about it, but I paid it and was sitting back down, I'm like, wait, and I literally had to grab the receipt to double check. I was like, she must have charged me for 2 meals. He's like, no, it was one meal, and blew me away. I'm like, oh my. Like I felt inflation inside of it. And so when you're talking about asset inflation, that's the type of stuff that you're referring to, including housing or just more of that type of product?
Yeah, so what you're describing there is like what they'll publish in the consumer price index. Separately from that is, what is a cap rate going to be on an apartment building in a few years? And I think regardless of what happens with milk, I mean, some of that may be supply chain related, but assets, as long as interest rates are this low and money keeps printing, the big investors are just pouring money into assets because it's one of the only safe havens. And leveraged real estate for me is one of the best hedges. You've got gold, silver, potentially cryptocurrencies, which are all generally more volatile. But for me, I just had about as strong of opinion as I could have that. Having conservative leverage, but on real estate, locking in a longer term low interest rate on an asset that rents are going up, that you have the ability to also add value by renovating units, whether it's an apartment complex unit by unit or the single family housing market. You could both increase the value yourself through some sweat equity, but also have a hedge because if the US dollar keeps devaluing, you have long term fixed rate debt. You're paying back that debt at a much lower value, and that's just going to push appreciation higher on the buildings. I think in Venezuela right now, you have to pay 3 trillion Venezuelan bolivars for an apartment.
Now, do you see, one of the things you mentioned there, if you were listening, is like you mentioned, as long as interest rates stay low, they've been low for a long time, right? Like I'm by no means an expert, but I watch it, and the Federal Reserve has been really low and even at zero for a while. How long can they keep it that low?
Yeah, I mean, that's the $1 million question. I mean, I also think how can they afford to raise it that much?
Yeah, exactly. How can they afford to push it up?
I mean, the one thing, the current Fed chair, I mean, it seems like they have sort of learned from mistakes in the past. If you look at 2005 to 2007, they kept raising rates, into the last crisis. So, at least from...
Who was the Fed chair back then?
Not Greenspan still?
Yeah, was it Ben Bernanke was on the like the treasurer side, I think, right? When all the crash was happening. And who was that?
Yeah, I forget whether Greenspan had already retired and the next guy was in. So.
Oh, it's gonna be crazy now. But back in 5, 6, 7, they kept raising interest rates, right? And I was buying real estate then. I think you were too. I remember getting some loans back in that era that were towards the end, right before the crash. A traditional home was like 8%, I think is where I remember getting one of my last loans before the crash hit was like around 8%. And now 8% would be like insane that someone would pay 8%. And right now it's just like they're not ticking them up. That's there. And the other thing you mentioned was the amount of money they're printing. You said if the interest rates stay low and the money they keep printing, how long can they keep printing the money? Because that also has the inflation side and the devaluation.
Yeah, I mean, that's the crazy thing is it could go on for years. I read Ray Dalio posted a bunch of his book for free about the history of reserve currencies. And he went back to the Dutch guilder, to the British pound, to the US dollar, and potentially the Chinese yuan in the future. And it's generally the average country is only the reserve currency for 80 to 140 years in general. So I think the ultimate answer is as long as the US dollar is the reserve currency, and I went all the way to Hong Kong expecting maybe to get some secret answer.
Yeah.
And to some extent, the US is still too big to fail.
Yeah.
And so we can probably continue to print until there's a viable alternative, and who knows how long
that's one thing that always goes to the back of my head is like the statement you made is like, is America too big to fail? And there is this thing that's like, without trying to be cocky or arrogant as an American, is like we are a lot of the world economy floats inside of us, right? With all the different things, importing and exporting and so forth. And it's like, dude, just like back in the day with banks being too big to fail, there is this part of me that thinks America is too big to fail in the world economy, and until they get to like doing some mass reset of something, is really too big to fail, it seems like. Do you think it is, or do you think they could let it just crash?
I mean, it's too big to fail until it isn't.
And Lehman Brothers.
Yeah, the things that keep me up at night after really just coming out of college into one crash and then living through a second one just as I was getting established, and I pivoted a few times already, is that what am I not seeing, and what am I not missing, or what am I missing? And some of the the buzz around cryptocurrencies is one of those things. Is like, what happens if the U.S. is not the reserve currency anymore? I mean, we're still nowhere near there, but there's these things on the fringes right now that you never know if a couple years or a generation from now there is some type of reset. I mean, the one thing I seem sure about, at least I feel pretty sure about, is neither political party has the wherewithal to actually run a budget surplus. Yeah. So I think we're going to run a deficit until we can't get away with it.
That's what I'm saying. That there's I don't see any insight until it blows up, because I don't think you're ever going to have another president that comes in and says, okay, we're going to put all the budget back in order and we're going to get I don't ever see that happen, because the party that is in office, if you will, needs the economy to do good so they can get reelected and voted on again, right? And so whether it's Republicans are in, well, they want the economy to go good because so many people vote on the economy out of their pocketbooks, right? And one way to do that is keep money pumping into it, and then Democrats come in, and the next whoever comes in right now, Democrats are back in. It's like, well, they're not going to say, okay, what we're going to do is we're going to cut all of it, because the market would just boop, and then that automatically just means they're not going to get voted in the next year. And I think we got this point where now it's like, forget it. There's no more budgeting it. There's no more cutting stuff. It's just how much is the next surplus budget? I mean, how much is the next loan printing going to be to keep that party moving, right? It's almost they chose party over policy inside of it. And I don't see it ever changing again until it crashes.
Yeah, I 100% agree. And then once there is that crisis, I forget who said it, but there's the quote of never let a good crisis go to waste. Yeah. And that's when they'll have to either make some tough decisions or push through some changes that would just never be politically expedient.
Yeah, it's unique, and I think you're right on the printing of money. I don't think it's gonna ever stop until, I know we're at, I remember we were talking about, oh my God, we're about to break 20 trillion, and then it was like 2 years later, we're at 30 trillion, and it's not gonna stop, bro, until the whole thing blows up, and then we'll shift to either a type of a digital currency or a new type of concept, and that's where I think there's gonna be a massive, eventually, whether it's my lifetime or not, I think eventually there has to be a reset. Of not just in America, but almost like across the world, some sort of reset takes place inside of it. Without getting too far that direction, can you give the audience a little bit of like, from your market analysis, watching for those years, is there any certain kind of key indicators that the average investor should kind of pay attention to?
Yeah, I mean, interest rates are, just tracking interest rates for sure. If they are ticking up, as interest rates go up, potentially cap rates are also going to have to go up, which actually lowers the value of buildings. And the affordability index as well. I mean, the one other thing that makes me bullish on real estate, and part of the reason our fund is so heavily in multifamily apartments in growth markets, is wages are going up. There's a shortage of labor in many markets, and the working class, which most of our apartment buildings are, what I'd call workforce housing, middle class apartments. I mean, there's a strong demand for jobs. Wages are going up, so these our tenants can actually afford to pay the rent. In some cases, they're upgrading, either moving out of their houses earlier, or they're upgrading from maybe a lower end apartment to like a nice community, and they're coming into this renovated unit that we've delivered to them. So the affordability index, and that's different market by market. I mean, there's a mass of people migrating from the Californias and the New Yorks to Texas, to
Puerto Rico,
to Florida.
Let's talk about that. You mentioned your fund there, and it's the first time you kind of mentioned it. I want to just, from a high level, I want to know what it is. But before you even tell me that, what made you go start it? Like, you had the $3 billion kind of partnership. You sold off of that, and then when you got your MBA, what made you go open the fund?
Well, great question. I had a year plus in the program, in the MBA program, to try to figure out what I wanted to do. And as great of a run as it was on Wall Street, to be honest, towards the end, I kind of created myself a job I hated. It's a grind in New York. And I realized what I really enjoy is I'm a connector at heart. I love talking investments. I've always helped my friends and family and the people in my network find interesting opportunities, mostly in real estate. And the other side of things, I really enjoy helping partners and operators who, a lot of people who are really good operators are not really good at putting capital together. They want to be, head down, managing their projects and not schmoozing for steak dinners. And I certainly like schmoozing for steak dinners, and I just like nerding out on investments. So I realized that was really, the two things I would enjoy doing is, like, if I had a job, which doesn't feel like a job, is that. And second part of it is I needed to deploy my own capital. So I'm already, and I heard this actually at the mastermind recently that we're both a part of, is monetize your mission. And without realizing it or knowing that buzzword, I realized, like, I'm going to invest in this anyway. I want to have a vehicle that's available to have friends, family, colleagues, people I know, people that follow me, invest alongside me. So I created my own fund. It's a Reg D 506C. It's open to accredited investors. And investors can invest in the fund and be alongside projects that I have 7 figures plus of my own money invested in.
That's a unique point there, right? Because there's a broad stroke of sometimes funds, the fund manager is not actually heavily invested in the fund. Sometimes they have no money into the fund at all, right? And they're taking a cut, which is fine. I'm not saying it's even bad. But I'm saying I think one thing that makes yours a little bit more unique is that you are heavily invested in the fund. And it's more like, I love what you said, because it's so true. Like, you had to sell off, and then you're in Hong Kong trying to figure out what you want to do. And it's like, well, one thing I got to go do is deploy my capital. I have to go do that, right? In your example there. So then it's like, well, if I'm going to go deploy my capital, it's a much better way to go buy apartments, multifamily, commercial, and take down a lot of those projects versus going back into a single family kind of market with just yours, right? Which makes sense of why you'd open a fund, because you gotta go deploy your capital no matter what. So you might as well take down way better deals and less risk, actually, in my opinion, than deploying all of it just in single family, if you will.
Absolutely, yeah. Bigger is certainly better. As someone who cut his teeth in his early 20s in single family, and then when I moved over to the debt side, I was like, no tenants, no toilets. That was the part of the note business. Now we have tons of tenants and toilets in multifamily, but I'm not the one. It's at scale where if you have over 100 units, you have a full-time manager.
Yeah, you have to. Yeah, for sure.
Yeah, it's really like owning a piece of a business.
Right.
And the last benefit of having the people come alongside me is it actually gets us better deals. Yeah. The more money we invest in certain projects, we get better terms.
Right.
Than somebody who's just putting in $25,000 or $50,000 into a deal. So it's a true partnership. On
the business, I know it because it's a fund and you have all the regulations and so forth. But if they wanted to know more about your fund personally, where's the best for them to go?
Sure. The best place is jkaminvestments.com.
JKA.
Yeah, JKAM.
M.
Yeah, JKAM. It's short for JK Asset Management, which was one of the other companies I own. But the investment brand is jkaminvestments.com, and on there we have a link to the offerings page. It has the full private placements with all the disclosures and all the nitty gritty details.
Yeah, all the legal values.
Plus, it also has pictures of all the buildings that we're in. We have 14 plus allocations across mostly the Sun Belt and the southeastern U.S. 100 unit plus, very high quality, Class B, Class A minus type of buildings that we're renovating and increasing the value and increasing the tenant experience as well.
Yeah. One thing I like about just kind of how you have your fund structured, I don't know if this is the right terminology, I say it this way. I kind of call your fund a fund to a syndication, in the sense of, right now, I know you're going to, but right now, you're not out there doing an apartment deal that you're currently overseeing it, doing it, building it out, whatever you will, and then investors are putting money into that one apartment, which is a fine way to do it, nothing wrong with that. But yours is more about raising the fund and then going to different syndicators. One reason I like it better is because it kind of diversifies the investors' money on this side over here, because they're not jumping into necessarily always one deal, but they could actually be in several different deals with their money because of how you guys have it structured, which is a little bit different approach, I think.
Yeah, absolutely. It's sort of the if you can't beat them, join them thing.
Yeah.
There's operators and some of the the guys that we're partners with.
So freaking good. It is their gift. Like I'm like, how did you do that? And I'm in real estate, you're in real estate, but you're like, you see those certain ones, you're like, dude, you're on another level, bro.
Yeah.
As an operator.
Exactly. And they're also, a lot of times, they're going to get the last look anyway.
Yeah.
If you're not getting the last look, someone else is.
True.
And I want to be with the guy and sometimes they're not even paying the highest price. Yeah. Sometimes the last look is, you have a reputation, they know you'll close.
You're a closer.
And sometimes they're paying $1 million, $2 million less because the seller knows they're going to close.
It's the same way in single family, right? When you have a wholesaler brings you a deal, and they could go put it on the market and go try to MLS it and so forth, and hybrid a retail wholesale, if you will, but they'd bring it to me, and I'm not going to pay them the same exact price, but I will freaking close on that. If I say I'm going to close, I will close on it, right? And they bring it to me because for them it's like, oh, here, I'm going to give it to you because you're going to for sure close, and I'm kind of done with it. It's the same thing in the apartment game as well. There's people that have a reputation that if they say yes, that means yes, and they will close on that deal.
Yeah, absolutely. And those guys are often so busy that they're happy to work with a group like us that can bring them larger checks.
Yeah.
They just don't have the bandwidth in some cases to take on a number of small investors and just do all the paperwork that's involved.
Yeah. Hey, if you talk about the fund for a second, if I just ask you, hey, where do you see this thing kind of going? You're not new to fund management, but this is newer to the one that you have going on right now, per se. Where do you see yourself going into it? Like, where are you going with this?
So we'll likely continue to have the diversified fund because there's a segment of our network that really likes that. They want the diversification. So we'll likely do one fund per year and have between 10 and 20 projects in the fund in various markets because Texas is a great market, but that deep freeze happened.
Yeah.
And I don't want to be only in Texas when something bad like that happens because you never know if the insurance company is going to pay.
Yeah.
And you may go 6 months to a year without cash flow. So I like that diversification, and a good amount of our network likes that as well. We're likely to expand into also promoting individual deals that we're also a part of and giving our investors both options to go into specific deals or go through the fund and have both. So we're likely to expand into both models and do a couple of those deals next year as well.
This is more maybe of a little bit of business, but maybe a little bit more on the personal side. But why the move to Puerto Rico? What was that? If it's taxes, but why move to Puerto Rico?
So the initial hook to it was definitely taxes.
Okay.
I was in New York City. I was paying 50% when you factor in the federal, the city, and the state. And I also at the time I moved in 2018, I wasn't sure if I was going to exit or not.
Yeah.
But I knew there was a potential that I might have an exit. So turned out I went down there to visit, and there's a great community down there as well. But for me,
it's a good vibe. It's turning into this like really cool business, pocket vibe, if you will.
It's like a mixture of Silicon Valley.
Yeah.
There's crypto. There's a ton of crypto investors there. I mean, I'm not super heavy into crypto, but I've made some investments that I wouldn't have because there's so many smart people I saw that are,
it's a hub. Puerto Rico's a hub
really
for crypto for some reason.
A lot of stock traders and just a lot of successful
Did Ray move down there? Galileo?
Izzy Englander moved down here, Millennium, and then Peter Schiff is down there, John Malden.
There's some big players, like big players out of New York that moved down there.
And Logan Paul moved down there recently too for the younger generation.
I didn't see that he moved down there, dude. That's funny, dude. That Logan Paul is now based out of Puerto Rico.
Yeah.
I guess he's gonna be training there for his next fight with hopefully Mike Tyson.
Yeah, that'd be incredible. And then ongoing too. So it was definitely a tax savings, but going forward, only 4% on any export services, because they're trying to incentivize people to move down there, and especially take money that's coming that would never have really gotten to the island that people make off island. But there's also no short-term or long-term capital gains for 20 years. Yeah. So that's just an incredible way to compound income over the coming years and revitalize the island as well. I mean, my network, we buy houses, we buy cars, we spend a lot of money on restaurants and give
going
to charity.
Out shopping and so forth, right? Do you see? I went down there and did a ton of exploration on the taxes and met with attorneys, a mutual friend of ours I met with, and do you see the government starting to crack down more on Puerto Rico and all the tax benefits?
It's certainly a possibility, and it happened in the 90s in the pharmaceutical. Puerto Rico had a huge pharmaceutical presence, and combination of a little bit of just offshoring in general and macroeconomics, along with a push during the Clinton administration to end some of the incentives that a lot of the pharmaceutical companies on the mainland, and even some of the state senators who just saw all this money going to Puerto Rico, and it was a very upper middle class area. A lot of people had second homes and various resort communities, and I feel like it's a matter of time until something changes in the program and it becomes either much harder to do or just not as lucrative. So I'd certainly encourage anybody who thinks they may have the interest in doing it and the wherewithal and the ability, the flexibility to do it to look into it soon if it's something you're thinking about.
Yeah, it's a really cool product they have. That you're right. Probably eventually it's going to shift, change. They'll make a new law. They want more tax revenue, and it's a good place to go get more from, right, over time. But in the meantime, whether that's 10 years from now or 5 years from now or 20 years from now, in those 5 years or 10 years, if you're in business, it could be some massive tax benefits there.
Yeah, it was life-changing for me, just on the treatment of my sale, but also just even on the ongoing, just moving forward year by year, just saving at least 33% compared to just federal. And then
the capital gains is a big one too.
Yeah,
it's huge.
Yeah, even last year, I do a little bit of option trading. Certainly not a professional options trader, but just even on my personal, what I call my play account. That would all have been short-term capital gains in the States, but down there it was completely free.
I wonder if that's why there's so many crypto guys based out of there, because a lot of the crypto guys are using it really as a stock investment. They're buying and selling and then letting it drop and buy, and which would just destroy you in capital gains. If you were, especially the money they're moving at. I wonder if that's why they're down there, because it is a hub of crypto geniuses, like real players down there. And I didn't think about that, but I bet you it's the capital gains from buying and selling.
100%. The short-term, short-term capital gains rule is incredible. I know so many traders that were in New York for 10, 20 years, and just it's hard to not move down there when it's just so compelling. Yeah, when
you're moving it. Talk to me about. I'll talk about entrepreneurship for a second, right? And you've been an entrepreneur pre-Wall Street, and then even there's pieces of what you were doing in Wall Street was still entrepreneurial kind of based with the fun there, and then of course now as well. Talk to me about a little bit of entrepreneurship in the sense of, you kind of, like you said, saw your parents and grew up this way of wanting to drive it and get to this level of success that you're at. What would you say is one of the main key success principles or key ingredients that Jack has used that's helped you the most kind of find success?
So I've always been just a natural networker, and I've always led with how do I, what's in it for the other person? How do I add value? How do I make somebody a connection, regardless of if they can do something for me? And that's led to some of the connections that have turned into just what it turned into. One of my best friends kind of gave me a compliment that he's like, a lot of people say you got lucky, but they didn't see, what you were doing behind the scenes.
Like the iceberg analogy.
Yeah. He used the fertilizer. He used the stepping in it, and he goes, "They didn't see you spreading it around." But that's one. And then as I've grown and learned from some mistakes, the other key one is just knowing my own personality and what I'm not good at, and avoiding kind of falling into the traps of what I'd call putting myself in the wrong seat or creating myself the job I hate. So over time, and I've certainly learned those lessons the hard way, is I really make sure that if there's something I'm going to get into now, I ask myself, like, is this going to create myself a job I hate, or do I have the right partner or the right the right employee to run this where we can do it successfully?
Yeah. I want to talk about the networking for a second because 2 points there. A lot of times when people say networking, and networking is definitely one of my like fortes and strengths, and I'm a naturally enjoy it and have fun with it. But a lot of times when people say networking, or I'll say networking, to me, what we're saying is not what people naturally think when they hear the word networking, at least in my opinion. I think a lot of times when people think of networking, they think about going to a lunch or a business meetup or a thing, this, that, the other thing, and to me, that's not really what I'm doing when I say networking. To me, it's a very strategic meeting or place that I'm headed to that does have purpose. It's not just this random like, well, whatever happens, happens. I'm looking at it more from a perspective of, with my time, if I go to this meeting, and it doesn't have to be business. Like it could be literally I know you enjoy poker. It could be a poker tournament or hangout session. I'm okay with that, right? I'm not saying it has to be a meeting, but I would go there with selected purpose, that there is opportunity that I could come out of this. Not just like random, like, oh, whatever happens, happens. Is your networking the kind of the same, where it's a little bit more strategic, where you're headed? Now, nothing may come from it, but you feel like there should be something there.
Oh, absolutely, absolutely. Now, that's migrated over the years. When I was 22 and didn't know
You just go everywhere.
go to the real estate, go to the local meetup group, and
Yeah.
just kind of. But yeah, over time, and especially when you have, if you have the means to join professional mastermind groups where there's, a barrier to entry. It's like joining a private club. Whether if
Right.
you're a golfer, you join a country club. If you're not a golfer, you join these professional type of groups. So then in your area, I mean, Puerto Rico especially now, there's so many interesting people with interesting stories.
Yeah.
A number of us have had exits in recent years too. So there's a couple informal masterminds where people just get together to talk about the market, talk about real estate, talk about whatever everyone's expertise is. So yeah, I definitely want, I'm trying to surround myself with people I can learn from. And even if it's a completely unrelated business, I enjoy that.
I think looking back at it, I think when I talk about networking, you talk about networking, I think for the viewer to understand this, is not a random networking. There is strategy to where I'm headed to go network, not just, again, showing up. I think that's a big difference that I want to make sure entrepreneurs understand is like, guard that time, because it is all you have. And if I'm going to go do something, I want it to be as much as I can beneficial to it. The second point I'm going to ask you, and I've never asked this on the show, but I'm going to see what your thoughts on this. So I think the word adding, you mentioned the word value, like you, and you try to get with someone and just try to add value, right? And I think the word adding value has been this buzzword on social media that you can throw out everywhere, right? And there's people like you that actually understand what adding value truly is, right? To a meeting, to a conversation, to someone. And here's this thing that I've been like soaking on, like pondering on lately, right? Is like people say, oh, hey, go add value to someone, and the only thing I want to do is add value. I want to add value to this relationship. And the more that I thought about it, because I've said that, the more that I thought about that, I do think, and from at least my perspective, that, and I think from social media's perspective that's out there, I don't think that's the full story. And here's my point to you, or the question I'm trying to get to with you is like, when I say add value, I do have some sort of motive behind it, not in a negative way or a bad way, but I believe there has to be a motive there. Now, if I add value and nothing ever comes from it, that is totally okay. I have no problem. Like, I have no dog in that fight if there's nothing there. But to me, when we talk about adding value, I think if I was having this truly authentic conversation, I would say there is some sort of motive there. The meaning of me taking a meeting with you, right? Or vice versa. It wasn't that me and you sat down and had like some angles that we were trying to play. I'm not talking about angles, but there was motive from my standpoint. Like, I wanted to make sure that I knew more about you. I mean, I was asking all these questions because I wanted to know more about you, and so that I could try to help where I can connect the pieces too. I wanted to make sure I had value because you are a member, and it's like, hey, this is a great motive behind it of me making sure that you have as much benefit from being in my group. There was some motive there. Does that make sense what I'm trying to say? I'm not saying it right because I've never said it before.
There should always be motive, and I think the key is know where the line is. Don't try to, you don't try too hard. There's sometimes you just got to go out and watch football and talk sports, and it doesn't always have to be all business all day.
Yeah.
I definitely know some people, and every once in a while I got to be reminded to shut it off too because I'm passionate about it. But there's plenty of times it's just like, all right, like you could add value another day. Sometimes people just want to hang out,
right?
And I think knowing where to kind of know your audience a little bit, knowing when it's like more of a this is just chill time, this is not the time to talk business, and knowing when it's like, hey, I could really help, and then remembering 6 months later. I met a guy at Power Room, and I thought of two of my friends that are on the mainland that are never moving to Puerto Rico, but pay way too much in taxes.
Yeah.
And it's that self-directed defined benefit plan thing.
Yeah, sure.
Like right away, I'm like, oh, these are the two guys. I'm gonna send them this.
Right.
They both have young children. It's not like I see them weekly to hang out, but I'm just gonna reach out of the blue to guys I haven't talked to in a few months because I got something cool for them, and I know they appreciate that about me. And at the same time, I'll see them at a conference a couple months later, and we may just hang out and
I think the whole point of it is, I totally agree. I think that you do have some kind of motive, and I'm not saying motive is bad, but I don't think it's false to say, oh, I'm just here to add value. No, I would like some benefit from the relationship. Now, if there is no benefit, that's where I'm saying I do agree that you have to be going into it with the mindset of, I'm not here to make something happen in return. I'm not playing a tit for tat with you because that's a bad angle, but it's like, but there is a pure motive, and I think the key word is motive, not angle. And I would tell you that in my past, I had angles, not motive, not pure motive. Does that make sense to you? And angles, I think, are bad in relationships.
Yeah, and I certainly had motive, and maybe it seemed like I don't feel like I ever intentionally had angles, but also when you're up and coming and you're really trying to,
you're hustling and you're trying to put together,
you're trying to make things happen. And it's nice when you get to a stage where like there's less people can sense desperation from time to time, and it's a turnoff.
That's a great topic right there, is because you talk about money and raising money. Investors that are listening that are trying to raise money, dude, the point you just made right there is, especially when people kind of have money, they can sense the desperation when you're trying to raise capital, right? Like if someone's trying to raise money or raise money for a deal or get this partnership done, dude, there is a piece that I don't know what it is, like a sixth sense, that you can smell desperation. Do you agree?
Yeah, absolutely.
I don't know what it is, but it's like you can just like sense it when it freaking walks in the room of like, nah, I'm good, bro. I'm out on this. So I think it's super important when you go and try to do a deal or a connect a dot or whatever it may be, raise capital, whatever it is. I think you have to go in and you should take a step back and clear everything out of your head, get back to your core. Even if you do need the deal to go through, that's okay. We've all been there. But I think you got to go back to your core of who you are, and then go to the meeting that way. Because if you just go in focused on I got to hit payroll. I mean, I've been there where it's like, freaking payrolls. Oh my God, I got to go hit it. But if you try to go get money that way, it is a disaster.
Yeah, 100% agree. I think I've been on both sides of that.
Oh, I've been on both sides of it, right? Yeah. I was spewing desperation out, and it's amazing how there's like sixth sense on the other side of picking that up. For sure. One more question I want to ask you on entrepreneurship. I'm going to steal this from Elon Musk, but he talks about, one of his favorite questions to ask is, when you, as an entrepreneur, you fail at something or it blows up on you, or it's just a deal goes bad. It happens all the time in entrepreneurship and in market or economy, or you made a bad deal, whatever it is. Give the viewers a piece of advice here when something does go bad and you are in the valley of entrepreneurship. What's something that you have learned in the valley that you've carried on throughout your last 20 years or whatever it may be?
Yeah, I mean, I think back to that 2007, 2008. I think the one thing is, you got to be able to get back up and be persistent and go to the next thing. But it also doesn't hurt to take a small amount of time and do something different, just to clear your head a little bit. It goes back to what you just mentioned on the desperation. Sometimes you need to, have some level of distraction, and then you got to take stock on what happened. I look back in that 2000, where I lost money in 2006 and 7, was being undercapitalized and just being, overly aggressive and, sort of that Kool-Aid of, just when you really haven't been through,
Yeah.
Everyone back then was like, real estate never goes down.
Yeah, yeah, I remember that.
And just you got to take stock of your mistakes, and both on that level, and even just some of the things about how to set up the business, what my skill set was, how to create the next business.
That's a great point, because like in the crash when I lost a ton, I haven't thought about that from going in the valley, and I lost major in it inside of it, but I kind of took a year off of business, if you will, and went and got I went and got a job, not because I even had to, like I could have just went and did another business, like started something else up or whatever, but it's like I went and got a job with someone that I wanted to take what he was doing and say, okay, I need to learn from whatever he's got going on inside of it. But also, I never thought about that. It actually gave me like a year or so breather of taking a deep breath without having to hit payroll and everything, and then looking back and spending a year of reflection of what happened and processing little by little. Because when you go through it, man, it's deep.
Oh yeah,
it's deep. You know what I mean?
Yeah, I had a real crisis of confidence as well, and I think the biggest thing was, did I have unrealistic expectations that I could make it?
Yeah.
I was at the time like just 28 years old, and it's like I thought I'd be retired by 30, and
all
of
yeah,
a sudden
for sure.
I'm like, way further away from it than I thought I was 2 years earlier. So just having to just get my mind right again on just getting my confidence back that I can. That I can do it, and it's stung for a few months, but fortunately for me, it was the same thing where I got a job. It turned out to be the job at that fund, and was able to be somewhere where I didn't have to worry about payroll. Company was, a very very clear focus, and I was learning something new again too.
Yeah.
I'd been wholesaling, flipping, pretty much. Thought I knew pretty much what I needed to know about that basic space, and now I'm in a completely new space, learning bankruptcy and foreclosure regulations and. In an industry that was really just being created at the time too.
Yeah.
It was not that it didn't exist, but the pure amount of defaults that happened. I mean, there was new lawyers coming in, there was new funds moving in to buy, and it was really the growth of an industry.
Yeah, and it birthed, again, in every valley, there's also the mountain top that's ahead, and it also birthed new industries from that crash that are out there. And there's actually, you talked about something earlier, that some of the things that it birthed was Wall Street. Wall Street now has a full understanding of and program, if you will, for loan modifications and modify these loans, so that really that massive crash you saw in real estate probably won't happen again because of how Wall Street has now adjusted of how they would handle it.
Absolutely. It reminds me of I follow Howard Marks, Oak Tree Capital. He has a book on market cycles, and he keeps repeating in the book, history may not repeat itself, but it does rhyme.
Yeah.
And there's inevitably going to be some type of crash coming.
Sure.
But overall, the single family housing market, you had Blackstone, you had all the major funds come in and buy thousands and thousands of single family houses, and their cost of capital is way lower than the mom and pop investor.
Right.
They can securitize these things and get solid ratings and pull out 90, I don't know if it's 90 or 95% of their capital.
They play a different game.
It's a completely different game.
Sure.
There's still angles to make money, because I know a number of people that are making a lot of money selling and flipping houses into those groups. And then on the modification side, the reason, and this is very relevant to those that might be worried about just the flood of foreclosures and evictions hitting the market. Sure, there are a lot of evictions that have maybe been held up for a year and a half, but back in 2009 and 10, there were not funds set up to buy reperforming loans. Mm-hmm. What happened during that administration, right after the financial crisis, was the government really pushed modifications, and the servicers created programs to streamline them. And what's really driving it now, though, is capitalism, because with interest rates so low, there's an insatiable demand from hedge funds and private equity funds and investment banks to buy that paper, even insurance companies.
Right.
Some of the loans that we sold, the insurance company wanted the lower interest rate because they would not prepay as fast.
Yeah.
So loans that we thought of as less profitable were actually beneficial to the insurance company because they can match them to annuities, and they'd rather have a 2.8% interest rate that they knew would be on their books for 7 years, so they did not have to replace it. So because of that, I just don't think there's going to be more foreclosures. There'll be more properties available. I think some of this overhype where people are paying $100,000 above asking, that's just a supply constraint. But
right.
I think that it'll be a pretty orderly flow of properties, and I don't think it may bring certain markets down to earth a little bit, but I don't foresee a crisis on the residential side of the market.
Yeah. I agree. And again, in every valley, there's mountaintops that makes changes and corrections to it. On that topic of hedge funds and money, let's hit this sign right here, talking about what money is to Jack here. Obviously, we started this because kind of what you're going through now is like, well, man, I sold my business and I have enough right now, but there's got to be something more than just selling a company and having money, right? It's like, well, actually, I want to help my friends and my families, and I help them as well. So what I want you to do is, man, fill this answer out right here, whatever it may be, sign it right here, and me and you can chat about it on the wrapping up it here.
I apologize in advance for my handwriting. My mom always said I should have been a doctor.
And again, for those that are watching, again, you guys can follow Jack on all social media accounts, Facebook, Instagram, LinkedIn. I think you said you were most prevalent on kind of Facebook, Instagram, is where you spend a lot of what time you do for social media is on kind of Facebook. Well, what is your handle on Facebook? Is it just your name? Or?
Yeah, it's just my name. And we also have JCAM Investments on Facebook as well.
Facebook as well?
Yeah, actually. Facebook, Instagram, and LinkedIn. It's all JCAM Investments, and I'm on personally on all of them as well. And again, just the website is jkaminvestments.com.
So
Correct.
if you want more information for you as well. Let me see this right here. We'll get Jack's answer here. Jack, founder of JKAM Investments. His answer is money is potential. Money is potential. All right, bro. Let's dive into it. What is money is potential? What does that mean?
So just having money doesn't solve all your problems.
True.
And when I was younger, I might thought of that, but I'd thought of the word freedom, and that's been kind of used too. But it's also, you could use your money and trap yourself into something. I go back to that, creating yourself, diving into something that creates you more stress than you need. So I look at that from the having money side, and then from the other side of things, if you have potential, generally money will follow you. You need to work at it, but it also gives me the ability now to look for people and projects and groups with potential and work together.
Yeah, it's funny because you talk about money as potential. I think about money itself has great potential, right? But it also has horrible potential on the exact same dollar bill. This is where it gets like weird for me. Is you could take stuff and money, and now this money has potential to do all this good that's out there, right? And it has the potential to be super powerful in great ways. But in the same hand, it could be super bad. The same dollar bill could have transferred through a hand of someone that was using that money potential for bad, and it could have went to someone that was using the same dollar bill later on. If you tracked it somehow, the GPS could have been used for someone that donated it to a church or a foundation. And today, it's like, while we were here, we met Tim Ballard. He was in the office. We were doing some stuff with him, and from OUR Rescue. And it's like, think about that, dude. The money, that same dollar bill that I know you donated recently at it, but the same money that was used to be donated to go help, OUR Tim Ballard rescue children, that actual same dollar bill if you followed it out, if it was an older money, could have been used to buy children. Ugh. Like, think about that, dude. The same actual $100 bill or whatever it was could have been used both ways. That's why money is potential is a great answer to me. As I go through all the different words of what money is, and it's potential, which means it's what up to you or the person listening or viewing it's up to you what you do with that potential. Like, you could use it for good or you could use it for bad. But money is just potential.
Yeah.
It doesn't fit, like you said, it doesn't just because you have it doesn't fix a problem. It's how you use it.
Yeah, and money sometimes brings out the worst in people too. Some people fight. It certainly creates arguments It
creates wars. Think about it. Like, wars have been started over money. Like, if you think about one of the most powerful things on the face of the planet, would have to fall in the categories of money, love. Like, think about how many people have died over love, right? And probably in a good or bad way, you could say religion. Like, if you go back and think about those three concepts of what those three concepts have done in our society, good and bad, but it's crazy how much power they hold over people. It's insane in what it could do, right? Yeah. Wars have been started over religion. Wars have been started over love. Wars have been started over money. That means people have literally died on planet Earth because of money. Not even theirs, but someone else wanted more of it or something,
Yeah,
back in the day, they wanted more land. So they were like, well, which represented money. So I'm going to go start this war and 50,000 people are going to die so I can capture this land, so I can have more money. It's insane.
It is. And if you look at the U.S. right now, I mean, we have the strongest military.
Yeah.
We have the control over the monetary supply, and to some extent, the media. It's not quite love, but at least the the branding of the U.S. And if you look at some of the things with China blocking a lot of the sites and stuff, there's almost like a war. There's a little bit of a war on information right now, and the money war may or may not be coming. And I hope, God forbid, the actual military fighting things. I mean, there's always these smaller conflicts, but hopefully there's not another war.
Yeah, it's crazy, man. But it's a great answer. Money is potential, and when you say the word potential, it just means, again, potential does not mean action. Potential just means what are you gonna do with it, right? Like it's just sitting there, so it has it to potential to do it. It's like having a great NBA basketball player, but he's just sitting on the sidelines. All the potential is there. It's a great one is when Michael Jordan retired the first time. All the potential for him to probably win. Obviously, he won 3 more championships after it. All the potential, but wasn't being used in that arena. Therefore, it had no value. And you, in the greatest basketball player of all time, unless you're a LeBron fan, which you are, pound sand. Jordan was the greatest basketball player of all time, but with not being used, it was no value to the NBA Bulls fans anywhere else, man. Awesome answer, Jack. I appreciate it, man. Again, JKAM investments.com for you guys to watch it. Great information, and I can understand why investors invest with you because you do bring that confidence of market knowledge, and you do bring the confidence. It actually kind of spews out of you. As soon as you hit that topic, it's like the data. And I know you're actually cramming into this little bitty window here, but I'm sure on a beach in Puerto Rico, you could probably jam for several days on the market. And knowing that, having that knowledge is what gives you a competitive advantage over another apartment investor, let's say, who's just buying it because they understand apartments. I would rather be investments who understood the market, and then off of the market was making decisions with my money versus someone that's saying, oh, apartments are great. Dude, how many times in the show here, how many times did you hear back in 07, 08, real estate had never crashed, real estate had never go down? Okay, that's not freaking obviously true. You'd have been better off knowing the market and then basing your investments off of that, which I think is what you bring to the table now for investors that are interested in it. So awesome stuff, man. And you are a total geek out, or I think you used the word nerd on markets and inflation and money. So love having the show. Those that are watching, make sure you follow Jack. I hope you guys enjoyed the show, learning about the market and inflation, how it's going to affect you right around the corner. We'll see you next time on The Money Is Show.